Welcome to Beyond the Deal. I'm Nicola Ebmeyer, co-founder and co-CEO of Gain. Today I'm joined by Peder Prahl. He is the founder and CEO of Triton. Peder founded Triton in 1997 and over almost 3 decades has been building one of Europe's most distinct buyout firms, focusing on industrial tech, business services, and healthcare. Peder, I was wondering, you actually started investing when you were only 15 years old. What brought you into the world of investing? What's fascinating?
I think, like you, I am an entrepreneur. My parents that had a very small shoe company made us pack shoes, me and my brother. And I figured out that instead of packing the shoes, I could also sell some of the rejects. And then I actually made quite a bit of money from that. And then I had to figure out, what am I going to do with that money? So I started investing it. And from 15 years old, I fell in love with the challenge, the opportunities, the gains, but also the risks that come with investing.
Oh, I love the story. It's so hands-on. And then you didn't stop there. You didn't stop with the shoes, right? So you moved on to found Triton. I'm very curious to hear what has changed over the years.
Many things. I think one of the main things for those of us who were fortunate or insightful to get into what we today call alternatives or private equity very early, which I did in 1998 in New York, is that during the early days, this was really for entrepreneurs and for investors. And there were very few of us that were pursuing a lot of opportunities. Now there are many pursuing probably the same number or perhaps a slightly growing number of opportunities. So the supply-demand function has changed materially, which means that you have to become much better at what you do than we needed to be in the early days.
Peder, with Triton, you have built one of Europe's most successful buyout firms. How do you differentiate across the investment cycle? Starting during origination, how do you build conviction around an asset?
Our job is to deliver sustainable, good returns across any cycle. Our way is to think about buying well and then improving the companies that we invest in. So from a Triton perspective, we see ourselves as entrepreneurs, as business builders, and investors. And the combination of those three is, I think, what has led us to remaining investors as opposed to becoming asset managers.
With currently market multiples being down, or at least we don't see an automated market multiple uplift anymore, the whole value creation has become more important. And as Triton, you talk about building better businesses. What is it that you are actually doing by holding on to your assets?
The way we think about it, first of all, is that you need to think very carefully about what you buy or what you invest in. And then, of course, it's all about the people. It's about the people at Triton, but it's also about the people at the management teams that you work with. And I think another part you really learn, having done this over many decades, is that it's important to have a framework, an investment strategy, an investment approach that you then stick to apply some discipline. So I think where we've been pretty good is not get caught up with, when the multiples ran away very high.
Coming back to the alignment with people, it's obviously the investor, but also the CEOs, the management teams running the businesses. Historically, we have been looking at holding periods of 4, 5, 6 years, and then the asset would be sold to another sponsor or strategic buyer. What we now see is we have a record number of assets in the backlog being ready for exit, but somehow the market is not fully open yet. How do you deal with that?
I think from a market perspective, the M&A markets are fully functional. The debt markets are very helpful. So the fact that things are not being sold has to do with that the owners want a higher price than the buyers are willing to pay. And I think that's a reflection of the past, that prices were maybe twice as high as they would be over a normal cycle for a while. And therefore people are stuck because they cannot sell them at the prices they would like. From a Triton perspective, we have been able to sell businesses because we've approved them, but also because we didn't pay that much for them way back when. And going forward, I think you'll see that it will take quite a number of more years to work out of the system.
Yeah, very, very clear. And listening to you, I think what helped Triton was that you have been disciplined in investing, also during the era of free money. So there you didn't go with the hype, which also gives you a bit of leeway now.
Yes, and to be very clear, we also made mistakes, but perhaps fewer than others because we felt that the prices were high. So one of our flagship funds, Triton 5, we invested from 2018 to 23. That's 6 years. Many others invested 2 or 3 funds during that period. So we all make mistakes. And I think one of the core aspects of being investors is seeking to recognize and learn from your mistakes as much as from your successes.
Absolutely. This is how we grow. Peder, the last years were quite challenging for a couple of firms when it comes to fundraising. Apparently not for Triton, since you successfully raised Fund 6 at 5.5 billion. Curious to understand from you, how did you build the trust of the LPs in this somewhat challenging situation?
The way we, I think, delivered on it was through a combination of delivering the returns that we had set out to do, not only in the recent funds, but in prior funds. I think investors have a trust in that we're going to do what we say we were going to do. Secondly, I think we were able to sell and show that the returns we were showing were also realizable. And that kind of built the numbers trust from the LPs. The other part in this is that there's a human interaction with everything.
Yeah, and they're curious. I mean, Triton has always been very strong on industrial tech versus, let's say, software. And now, obviously, with the whole story about AI is eating software, it's a bit of a challenging situation for those software specialists.
Yeah.
Do you think the fact that Triton has always been strong in industrial tech and other sectors was an advantage?
The recent turmoil in software is very new. So I think actually the fact that when we were raising the capital, the fact that we were industrial was not a positive at that time. I think if you look at it today, as in the last 6 months, yes, that probably is a positive. Having said all that, in my view, there is room for software, AI, industrials, services, probably even for consumer goods. So it's more important that you're very good at what you do than being very specialized and just doing one thing, I think. One of our values at Triton is to be future-oriented. So a number of the industrial, but also business services businesses that we acquired over the last 5 years, at that time, nobody wanted to buy them, at least to our knowledge. Today, some of those industrial groups are doing very well, and a lot of people would like to buy them. So as we look forward today, we are looking for what the future will want, not where we currently are. And I think that's important as an investor, because you're really investing in the future. And in particular, if you're building better businesses like we do, that will take us a number of years. So we really need to invest in what others will be attracted to in 3, 5, 10 years.
Yeah, and that's so exciting about private equity, that it's a long-term game, pretty illiquid market.
Yep.
And then last question on fundraising. So how has the current geopolitical situation impacted the fundraising? I can imagine fundraise being spread over so many months, so many different things are happening on a macro level. How do you control this?
I think that, first of all, you cannot control it, right? So Our job as investors is to be approximately right, to see the direction of travel approximately, not precisely. And in that context, we will make some mistakes. The geopolitical situation that you allude to probably at the time was a negative for us during our fundraising, because at that time people said, we don't need Europe, we only need North America or United States, we only need software. I'm simplifying a little bit. So those who invested with us kind of saw through that and had a conviction that industrials and Europe is also interesting, which it has been over decades.
Peder, we have been talking a lot about fundraising, successful investing. All of this obviously would not be possible without the right people. So what kind of skills are you looking at when hiring for Triton?
There are many good people around everywhere. So it's more than just getting good people. It's actually getting the right person for the right role at the right time. And I think over time you develop some pattern recognitions to learn and to appreciate, does this person, whether it's an associate at Triton or a partner or a CEO, have the right skill and the right will for that role. Importantly, today, the world has changed in that we all really need to understand and use technology. So we are in particularly going forward looking for people that actually love to work with technology. Because I've learned over the years that people tend to do what they really like to do. And if they love it, they do even more. And since we see that technology is going to be critical to everything we do, we look for people who really love working with technology, including your products.
That's obviously gold to my ears. I know that Triton has been a very, very happy Gain user for years now.
That's
across
correct.
across your markets.
Yeah.
How does your team use Gain?
I think we use Gain for looking for example, what other firms are doing and better than us. We follow for example, how many acquisitions have somebody done, mapping out acquisition targets. Of course, also we're trying to be at the forefront and learning new areas, and some areas maybe that are not covered in what you do because it hasn't started yet. So we are looking for the second or the third derivative of things where people have not done, for example, roll-ups already, and go into those. With technology, there are a lot of things that technology can do that we as humans were doing before. I mean, when I started working in New York, I spent 80, 100 hours just doing modeling to understand prices, volumes, inflation, cost of goods sold, fixed cost, variable cost. Today, technology can do a lot of that. So we think that the people that work at Triton elsewhere, they need to use the technology to the utmost, and then they can spend their time on things that technology cannot do as well, which is interacting with people, being outside, talking, experience, meeting founders, understanding what their needs are, so that they, when time comes, would like to sell or partner with us.
Thank you, Peder. There is a few themes that I heard coming back through the different topics that we touched upon. It is this long-term view that you are having. It's sustainability, is doing the hard work actually, also when it's tough, and looking ahead, trying to anticipate what's coming next.
Yeah.
Thank you for your time.
Thank you.